what the chart looks like then. Here's what the chart looks like now. It didn't hit exact price points, but the flow of it, the cycles, the consistency of it is there. And I want to work that into today's analysis. So please hit the subscribe and the like on the way in, and let's just jump right into the analysis. The first thing I want to mention is on this chart, this speculative cycles of Bitcoin. I'm not going to spend a ton of time here, but when I did this in 2018, I had a way different view of how cycles worked, how markets worked. I think a lot of the indicators I used here, I still use, like the Fibonacci, these yellow lines. When it comes to the macro, and I'm going to build this into today's analysis, trying to find a bottom of a bear market, the Fibonacci, these yellow lines have been a phenomenal area, an accumulation area. And that's one thing. But a tool that I didn't have then was just a multi-cycle insight. And that is liquidity and the business cycle and PMI. I'm not going to harp on it in today's video as much as I have been lately, but it is important to note because I will be discussing it a little bit. So what I first want to do in this video is I want to just talk about, is this happening? Are we about to fall into the 50s for Bitcoin? Let's first go over to a Bitcoin chart and let's just kind of see the data that we're working with, just from a purely technical analysis perspective. And that is, man, this 20 week is falling below the 50 and we're entering a bear market. Here it is happening all the way back here for Bitcoin in 2014. I just want to just show you, by the way, 20 below the 50, 154 days. So if this is going to happen, and by the way, I'm going to explain and show you exactly why I just don't think it's going to play out this way. If it is, though, and it's totally okay for me, think of these time frames. From this moment, you might have 154 days to prepare for whatever the next cycle is to bring. Now that's comparative to this cycle all the way back in 2014. But we go back to 2018, 20 falling below. If you remember the 2018 bear market, 168 days. Okay? 154, 168 days to prepare for that bottom. And by the way, everybody, this is actually in our staging now, our accumulation planner. And I did not think at this part of 2026 we'd be building and getting ready to release an accumulation planner. But just keep in mind, if you're a member of CCV in our intelligence system and you want to accumulate based on risk, this tool will be available if, and not only if, it'll be available, but if we do fall into this crazy bear market, it is going to be invaluable in terms of accumulation based on these risk models and these risk scores that are happening in these environments. But that's 2018. And then we go to last cycle. Now, here's the thing, and this is where things become kind of, you really have to bring into play macroeconomic data to really start understanding what's going on. Because if you look at it, 20 below the 50, bear market. But check out the bottom, 238 days. It's like, it got longer, right? What's going on there? And if we look at this, even if you look at the way the bull markets have been and how it's been this cycle, what's going on here? Now we start seeing, okay, there's the consistency of the bear markets with the 20 falling below the 50. It's happening now. Can we sit here and just say it's going to happen again? Happening now. Can we sit here and just say it's going to happen again? From just strictly that moving average analysis, I guess you could say that. But when we start thinking about, from a macroeconomic and liquidity perspective, what was going on here and here, well, now things are way different. And by the way, even here, and I'm going to show you in just a moment, things were way different. This was record-breaking liquidity extraction. So this bear market that we had back here was like nothing we've ever seen in terms of what the Fed was doing, liquidity being extracted. If we bring up the business cycle, look at that contraction and capitulation in the business cycle because of QT and everything that the Fed was doing. So we start understanding, oh, okay, if we want to really start trying to explain the time frame, why was it a little bit longer here? We get actually some really key macro insight other than just a moving average move, right? Or a momentum move on a chart, or even a 4-year cycle explanation. No, we have actual macroeconomic data that's saying, hey, this is what was happening with Bitcoin and crypto. And I'm going to look at the altcoin chart, Ethereum chart in just a moment. But I want to continue explaining this, and then I'm going to explain why I don't think we're going to get just this similar exact move. Now, if we go back and we actually bring up PMI for a moment, because here's one thing. If you look even at the 2018 bear market, this was the first ever quantitative tightening that started happening, right? So we have QT happening at the beginning of last bear market, QT happening at the beginning of this bear market. This is a big explainer, I would say, in terms of why we're getting that 20 falling below the 50. But then we go back to a cycle where we didn't have QT at all because QT hadn't ever started. Here's the 20 falling below the 50. What was happening? Even in 2014, PMI was topping out. It was already in expansion mode with the 2012-13 bull market. It was topping out and getting ready to contract. So now we have even macroeconomic data going back to 2014, the 20 falling below the 50. That is so similar to the macroeconomic data. That is PMI topped out, bear market. PMI topped out, bear market. PMI topped out, bear market. Every time the 20 fell below the 50. And guess what? 20 falling below the 50, yes. But what's not happening right now, everybody? The PMI is not topping out. It's towards the end, in my view, of bottoming out. Now, here's where things get tricky. And we're going to start, I know I keep saying I'm going to integrate the altcoin and Ethereum charts, and I am. But as the roadmap, this Bitcoin chart is key. Right now, what is everybody talking about? This move, the bear market starting. I think we're probably going lower. And I'm not saying we're falling into a typical bear market like the ones I just tracked for the last 3 years. I think we're going to go lower. I think we're going to see resistance here. And maybe me just saying that and doing analysis in a video will just get an absolute explosion through the moving averages. If you watch my videos, you know exactly what I'm talking about. But I think we're going to get rejection here. You know why? Because I just think the market makers and the exchanges and all the firms that are just pulling the strings right now, they see everybody's just talking about this move right here, and we're about to fall into a bear market. I think they're going to start they're going to mess with price right now, and I just don't know what that will look like. Put that aside, my theory of manipulation and whatever they're going to do, I will just be watching this area just from a strictly technical analysis perspective. Let's see if we can close weekly candles above that area. That could be a very big deal, something to keep an eye on. But right now, I wonder, as we do wait for the expansion of PMI, and this could lag, right? So this is the thing that we need to keep in mind. In 2019, when QT ended, right here for the first time ever, we went lower anyway. So QT just ended, and we've been talking about just the possibility that we go lower. But for me, that's not a bear market starting. For me, that's just post QT normalization that happened back here, and we're waiting on the expansion of the. So we could go lower, and I think we might, because this is what happened post 2019 QT ending, and it could totally happen again. What's weird about it now is that could happen, and that could start looking like, man, we're falling into the typical bear market. And I think it is going to be very tricky waters to kind of navigate through. And so what I want to do is say this. The worst case scenario when we're looking at these charts, let's just go start looking at altcoin charts. Let's just say worst case scenario hits, right? And we actually are entering this move. Well, if we go back to, say, 2018 move is 147 days to the bottom for altcoins. This excludes Bitcoin. It was 63 days last cycle, the 20 falling below the 50. So keep that in mind. And then it was just, man, at that moment, if you were accumulating altcoins for the weeks and months to come, you were good to go. After 63 days of the 20 falling below the 50. So these worst case scenarios, 50, 150 days, if this move happens and we're starting to fall, right? And all of a sudden we're at 800 some billion market cap, we're testing the 200 week moving average, we're falling below the 200 week moving average, 700 billion. What's going on? Crypto failed.
ये ट्रेडिंग स्ट्रैटेजीज सारी ट्रेडिंग स्ट्रैटेजीज का बाप है। ये सारे सेगमेंट्स, सारी टाइम फ्रेम्स और सारी टाइप की मार्केट कंडीशंस में इजीली एग्जीक्यूट होती है। और बेस्ट पार्ट इस स्ट्रैटेजी की
100 billion. What's going on? Crypto failed. Well, 2 cycles ago, 150 days or so. Last cycle, 63 days or so. If that move just plays out, I don't know. I don't know what else to tell you. If you want to try and trade that and leave crypto right now, after just everything that we've been through, go for it. I will not be doing that. I will be preparing for a move like that and whatever is to follow. Because I think, from a macro perspective, even at these levels, I think there is an incredible bull market in store for crypto. So it's whether you think it's going to play out like this on the screen or whether you think it's going to play out like this on the screen. Are you a macro value investor in the crypto space? Because if you are, and you think this might even happen, just prepare. I don't have the risk appetite to try and trade that, to try and just be like, I'm exiting the market, I'm waiting for this. I just don't have that risk appetite. I'm the type of person that's just like, I'll endure this and I'll live with it. And if maybe there's the potential to accumulate, I'll accumulate more. Going to Ethereum. So here's 2018, 140 days, 2022, 84 days. And just notice, once again, what is PMI doing? Look at what PMI is doing, that green line, that's the business cycle. We are in a total opposite area right now. And by the way, on the Ethereum chart, I just want to mention this. If you look at Ethereum structure, it's like Ethereum doesn't even look like it has this structure, right? When we're looking at this bear market starting, it looks like it has the absolute opposite structure, similar to the entire like multi-year bottoming formation back here. And so I still think crypto post QT could fall. Ethereum could fall to 200-week moving average back in the low 2000s. Everybody's saying the bear market's starting, this is it, and guess what? Boom. So crypto could fall still in the short term post QT. I just don't think it's because we're entering a typical 4-year cycle bear market. I think because we're entering post QT, like in 2019, normalization, PMI, waiting for the PMI expansion. And so as we get some type of dip or consolidation or even a higher low from tariff fear lows, maybe we're getting a higher low at 2000, everybody's going to say bear market. And it's like, fine, was that the bear market? If this plays out, was that the bear market? In my view, it's kind of like, no, it's just an extended, annoying just cycle before we even get the bull move still. Because we've been waiting years for this. So that's that. And then you go look at others, like everything excluding top 10, check it out. 105 days in 2018. And if we look at the 20-week falling below the 50, 231 days. And keep in mind too, all of the, FTX, Celsius, wherever in here, SEC attacking crypto, liquidity extraction like we've never seen. Please keep that in mind when we're looking at this. You can't just be like, man, we are getting this exact move right now because of 20-week. No. This move didn't happen just because the 20-week fell below the 50-week. This move happened because of record-breaking Fed liquidity extraction, record-breaking PMI contraction, and all of those things. Right now, we're at the opposite end of that. QT just ended. The liquidity extraction is over. We're getting liquidity entering the system now. If PMI catches up and starts expanding, the bear market everybody's waiting for, in my view, is not going to happen. So I wanted to try and paint a very clear picture of these charts, as right now, we really are. Everybody is watching Bitcoin just 20-week averages. And rightfully so. I do technical analysis. I'm watching it as well. But what I'm trying to do now this cycle, especially when I think of my analysis back here in 2018, which was pretty sound from a technical analysis perspective, I'm trying to bring more data, the fundamental macroeconomic data that also moves these cycles and moves these charts. And I'm trying to bring the picture together. So these are my thoughts today, everybody, as we kind of wait to see what markets do. I appreciate you watching. If you enjoyed the video, please give it a like. And if you're not a subscriber, please subscribe. And if you're not in our intelligence system with our risk models, our exit planner that we do